It is Tuesday, December 4th. Did not make a video on Monday, but I'm making one now. Monday was about 1,000 day plus. This one's a little bit over 1,000 minus. Big gyrations in the market. You can see in the past couple of days I've sold LEU for about $150. Really small trade. I received some dividends and I've just seen some gains and losses. Um, Today was a bit of a bloodbath. Uranium was down. The whole market was down actually about 3% overall. Some of the big names are down big. Like you can see, Apple's down 4.4%. Google, everything went down, except maybe gold, silver, and utilities, I think, was the other sector that kind of survived. But basically, huge down day, um, almost for no reason. You know, the Monday rally was supposedly because of the tariff situation, and this one I guess again about tariff situation, but really it seems like the market is just looking for any excuse to sell off, and that's exactly what's happening in my opinion. This is my market short here, went up 3.17%. SH is now starting to pay dividends because they're seeing so much downside this year. For those of you who don't know, SH is a index, an ETF that tracks the inverse movement of the S&P 500. Now, I mean, I'll give you a quick overview here. Um, I have what else? Basically, everything emerging markets was down just a little bit, but even China, I think, like if you see here, Alibaba, JD, all these guys, and FXI down, Switch down big, Spotify down 4.4%. I mean, it's just huge down days. My portfolio wasn't even that bad. I mean, the overall market, look, I went down almost 3%, but the overall market is over 3%. Nasdaq went down 3.8%. So huge losses out there. I'm trying to think of what other moves I made. I think I sold a call, or I tried to sell some calls, but I just didn't get the price that I wanted for them, so it didn't actually end up happening. But I got some dividends, and I'm trying to pull some money so I can make a little bit of a move. So far, yeah, I saw the switch call. So far, I've pulled 290 apparently, $290. So I'm gonna see if I can get, because I can't really put money into the account. It's been a slow month or two for me, and I don't have the cash to put in, so I'm gonna have to work with the money I got here. Um, I have some things expiring soon on December 21st. These are puts and calls and stuff like that, so I'll be able to refresh those trades. And then the next big date for me is January 18th, where almost the rest of the contracts are gonna end up either expiring or executing. So I'm really looking forward to that move. I'm really curious how the week's gonna end. Tomorrow is a day off because of the passing of former President George H.W. Bush. So we're gonna take a break there and we're gonna come back on Thursday to see what happens in the markets next. And I'm really curious. I'm expecting the sell-off to continue, but yet again, I'm not gonna do much about it. Just gonna try to ride it out and just work my option plays and just play the price and just stick to the plan. No drastic measures here. So that is the plan. Um, Funny movements in the cryptos. I just own this just to track. I don't have much of it at all. I just own it to see. I have just like $11 in it, just to see like what's going on for at first glance when I opened up the Robinhood app, what's going on in the cryptos. Not that I really care. I just kind of curious about it, see where the bubble mentality is at any particular given day. Big news: the 10-year is moving down. Um, the 2-year Treasury yield is higher than the 5-year yield. So some very interesting moves going on in the bond market. Some people claim that inversion of the yield curve is a sign for recession. Personally, I'm not that convinced, but we'll see what happens. I just think even though yes, some things point to a recession, I just think there's so much money out there still. Like I personally know some higher net worth individuals. They tell me they have like 50% cash or more of their net worth. I mean, that's a large amount of cash. There's so much cash still wanting to go into this market. It's just insane. And I just can't see these corrections lasting more than, 20, 30%, maybe 40%, but I just can't see another, 2008 scenario where the market drops by 50%. That's not, I can't envision that with this much money slushing around, even if the rates are higher, even if the real estate market is softening and whatnot. I just I don't see it. I think there may be a pause, maybe a sideways move for a few years, maybe more, but not a crash. And another thing, the reason I don't think it's going to happen is because the central banks are always going to be there to prevent the market from falling. It's clear now that that's what central banks want, that's what administrations want, that's what everybody around the world wants, is for the stock market not to go down. If everybody wants to want that, it's going to be a self-fulfilling prophecy because or desire because they have the tools to do it. You know, they have the tools to do it. It's a nominal thing. They can always print out money and buy it. If not the state, some other country will do it, and they're gonna go into the open market. I mean, China has done it already. They went into the open market and purchased shares outright and nationalized some of their stock market over there. So I mean, and that just money that flows into the global, economy, the money meaning like currency. So and that's the measure that we all use against assets like stocks and everything else. So they can force inflation at any moment they want. I really don't think they're gonna get caught with their pants down like 2008 again. Which means that if a little bit more softening is happening, I might just go very hard, very aggressive, and see if I can make some money off of this. All right, that's enough for now. I'll see you guys on Thursday, not tomorrow because the market's off, so I won't have anything to talk about. So I'll see you on Thursday. All right, peace out.